What's going to drive the market this week? Is it going to be Greece, China, T-bills, earnings, or the man in the hat? Hi, this is Dean Jenkins with the market update for the week coming up of April 11th, 2016. And let's just scan the headlines real quick and see what at least the financial writers are saying about what they think is going to drive the market this upcoming week. So here's a quick snapshot of Google News. If you just go to Google News and you type in market, you get the latest articles that people are writing about what's going to happen in the market. In New York Times says investors are looking for solid footing. I always love it when writers anthropomorphize the market, give it human qualities. CNBC says there's lots that's going to rock the market. I like this. Forbes, why is the market so wacky? That's a great question. Great line. Armageddon's going to have to wait. I guess that means that they don't think the market's going to be going down. I'm going to disagree with that. Treasury market signals the rally may be over soon. Okay. You know, you read through these headlines and they kind of go back and forth. And you go read these articles and they'll give an opinion on what they think is going to happen, why it's going to happen. If you've been following my updates, you know I like to look at the reality of the charts. I think all the information available is being distilled down. Traders and investors are responding to that information, and we can see that pattern playing out on the charts. So let's move on from this. This is fun, but let's move on to something more serious, which is the reality of the markets. Let's look at some charts. Now, I'm in my comfort zone now. Here's something I can look at, something that's real, because price and volume actually happen. That's not an opinion. What's going to happen is an opinion, but these patterns formed by price and volume have true meaning, and over time they have proven that you can predict what's going to happen next. Not with certainty, nothing's certain, but there's a very high probability. So if you've been following, you know I'm bearish on the overall market. We've had a very pronounced series of lower lows, lower highs, lower lows. I've been saying for several weeks this was an unusual rally, and that I thought this 2083 level on the S&P 500 would be pretty significant resistance. And it looks like we're rounding it over and getting ready to head down here. And let's just look at a lower time frame real quick to see something even more interesting. So this is the S&P 500 futures contract on a 60-minute chart. So every price bar is 1 hour. And if you look over this last several days, we've had a very pronounced lower low, lower high, lower low, lower high. This is, you know, according to Dow theory, that's the definition of a downtrend. And you know, the up moves are absolutely losing momentum. The down moves are gaining momentum. I think there's a real case here for more lows to come on this lower time frame. And if we look back up at the daily chart, we'll see, you know, lots more lows to come. Last week I asked for comments, had some fun, said, hey, who thinks the market's going to close lower last week? It started up here, and I think about 3/4 of people said lower, and you were absolutely right, and it did close lower. So what do you think? I think it's getting more and more bearish. I think it's definitely going to be closing lower next week again. But once again, go ahead and give your comments, your opinions. That's pretty fun to interact with and hear what you're thinking as well. And I'll just briefly revisit my longer term forecast. This is the S&P 500 on a weekly chart. So every price bar represents 1 week. And again, see this very clear pattern, lower lows, lower highs, lower lows. Lower highs stalled up against that resistance area. And I still think this analysis that, you know, through the rest of this year, maybe into next year, the correction to the market is going to take us down to 1644 to 1343 on the S&P 500. Let's take a quick look at gold and oil, as always. So here's the gold futures contract on a daily chart. If you've been watching, several weeks ago, I had said if it breaks through this level of 1113, then the recovery in gold was on. Of course, that happened, went up dramatically. There was a chance that this could be a new wave 3 in terms of Elliott wave, and that it might pull back into a wave 4 before heading up again. It looks like it's heading up again. We'll really know early next week. If it continues up from here, then that was just a minor pullback. You know, it doesn't move in straight lines. It's higher highs, higher lows, higher highs. And this uptrend could continue and gain steam. We'll have to wait and see. There is a chance it could pull back into this zone, Fibonacci retracement zone 38.2 to 61.8 before resuming up. I think next week will tell us that for sure. Let's look at oil. I've been saying for some time that I thought the recovery in oil was getting underway. When it crossed a resistance line of 37.09, it pulled back pretty sharply for a couple of weeks, but now it looks like it's recovering. And so again, this pattern, higher highs, higher lows. Looks like new highs could absolutely be put in here, and the recovery in oil could take us up to 63.34 up to 84.30 per barrel on the futures contract. So that's not good news at the gas pump, but you trade this right, and you can go buy a new car, and that might help you feel better about what you're paying for gas. But this still looks really bearish or bullish, and it looks like the recovery is underway, and we're already trading this. We got some great energy trades in play right now, and we're looking for more as well, and there are lots of them out there. Speaking of the trades that we're taking, I have a stock picking service. We publish my picks that I'm trading with my own money in my own account. So far, we've closed 13 trades this year. We had 10 winners, 3 losers. The losers were small. That's how we do it. We've won 77%. The winners are 6.5 times bigger than the losers. So we're up 13.76 in the portfolio. So that's a pretty good year so far. If you're interested in the stock picks, there's a link coming up on the screen, and you can take a trial for $7 for 10 days and check it out. So I invite you to do that. Just to look ahead at the next week at what's coming up in terms of economic reports. Really nothing big coming out Monday or Tuesday. On Wednesday we got retail sales, PPI. Of course, the oil report's a big deal. That moves oil, and the market's been moving with oil. Thursday, consumer price index and jobless claims, and then industrial production coming in on Friday. The big news is the earnings season really kicks off. Alcoa is the first big company to report, and that starts on Monday the 11th. So how the earnings comes out probably is going to be the thing that affects the markets the most. So we'll have to watch and see. But again, I'm bearish on the market. I think it will go down this week, and I'd love to hear your comments on it. So that's it for this week. Stay tuned, and I'll keep the updates coming. Thanks.